Crypto, the future of money, the revolution against banks, and the get-rich-quick scheme your cousin keeps demanding you about, while still working the closing shift at Applebee's. If crypto were a Tinder date, it'd be the guy who calls himself an entrepreneur, but is really just selling solar door to door. So yeah, if you can't tell already, I hate crypto. And by the end of this video, I'm confident I can convince you that the entire cryptocurrency industry is the single biggest scam of our generation. Let's start at the beginning. The origins of cryptocurrency trace back to 1983, when David Chaum introduced a cash, an anonymous electronic money system. And then, for the next 20 years, crypto lurked in the shadows like a charity fundraiser waiting outside Whole Foods. Then 2009 hit. Satoshi Nakamoto mined the first Bitcoin, and the nerds rejoiced. Suddenly, a decentralized, government-free, bank-hating digital utopia was born. It promised to be money for the people, free from governments and salvation from greedy banks. A digital middle finger to the financial system. At least that was the pitch. Because if you fast forward to today, the reality looks very different.
This isn't real money. It's printed by the Montana militia.
It'll be real soon enough.
Let's start with crypto's North Star, Bitcoin. It's been 16 years since Bitcoin launched, and it still has no real-world, widespread utility. Sure, you can technically buy things with Bitcoin, like a luxury watch or paying a freelancer in a country your bank doesn't trust. But in everyday life, you can't buy groceries, pay rent, or grab a coffee with it. There are around 350 million businesses worldwide, and only about 18,000 accept Bitcoin. That's basically nothing. And the ones that do accept it usually just use a payment processor that instantly converts it into dollars. As a currency, it's useless in the grand scheme of things. High volatility, high fees, and nonstop fraud. So yeah, Bitcoin can technically work as money, but that's like saying you could technically mow your lawn with nail clippers. The truth is, there's no real adoption and no real utility. Bitcoin isn't a revolutionary currency. It's a speculative asset driven entirely by supply and demand, just like gold. Except humans have valued gold for thousands of years, and Bitcoin isn't even old enough to drink. Instead of changing finance, crypto just became another casino chip. So if it's just speculation, surely it's a good investment, right? Wrong. Bitcoin's annual volatility is around 60%. The US stock market averages about 15%. That makes crypto roughly 4 times more volatile. That's why real money managers, the ones legally required to not be idiots, recommend putting only 1 to 2% of your net worth into crypto. Why? Because the risk-adjusted returns are garbage. Warren Buffett called it rat poison squared. Jamie Dimon called it a pet rock. And Peter Schiff said when you peel back the onion, there's nothing there. And maybe there's a reason institutions treat crypto like a gamble. Because it is. Yes, Bitcoin went from cents to tens of thousands, but that ship has sailed. For every Bitcoin, there are 10,000 useless meme coins. And if you think you're smart enough to pick the winner, congrats, you're delusional. And there's proof. CoinGecko tracked over 7 million coins since 2021. In a recent report, 3.7 million of them are now dead. That's over half, gone to zero. When a stock fails, you might get assets. When crypto fails, you get a JPEG logo, a Discord post saying, "We're pivoting," and silence. It's the only asset class where your money can vanish overnight. Not because of crash, but because you got rug pulled. So what did crypto do? It invented stablecoins. Crypto savings accounts, supposedly tied to the dollar. That's where Terra and Luna came in. An algorithmic stablecoin. Terra was tied to the dollar. Luna was meant to stabilize it. When Terra dropped, they printed Luna. When it rose, they burned Luna. Clever on paper, a disaster in reality. In May 2022, Terra lost its peg, the system collapsed, and $45 billion vanished in a week. One of the largest wealth destructions ever. So surely the exchanges were safe, right? Wrong. And this is where FTX comes in. FTX was a big and shiny money playground. Everyone said, wow, famous people, big signs, and lots of money. The boss, Sam, looked like a superhero of money. So people thought this must be safe. Wrong again. FTX took people's money. They played games with it behind their backs. The money got lost. Even the grown-ups with calculators couldn't find it. One cleanup guy said, "This is the biggest mess I've ever seen." It was basically fundraising for friends and betting it all on the nastiest DraftKings parlay imaginable. Crypto is a graveyard of hype, scams, and bankrupt dreams. And somehow it's still thriving. Peel back the onion and you'll find greed wearing a new costume. No intrinsic value, no trust, just the same pump and dumps and insiders getting rich while retail gets crushed. And every time it collapses, the reaction is always the same. How could this happen in an unregulated, anonymous industry built entirely on trust? Sure, blockchain might be useful someday. But right now, crypto isn't the future of finance. It's a casino. So yeah, I hate crypto. Not because I don't understand it, but because I do. Same lies, same greed, same cycle. So in the end, if something promises magic but needs blind trust, it's probably a trick.